Hello everyone and welcome back to CC Group Crypto. I am super excited. This is episode 1 of Web3 Wednesdays. Web3 Wednesdays is a series that I will be doing every single Wednesday. I will be uploading a new episode and I'll be covering the latest and greatest news in the crypto market, and I'll also be giving you guys my analysis on the current price of Bitcoin and other assets in this Web3 world that we're living in today. Two things I'm going to cover today. I want to talk about something that happened with Cryptocom, and I also want to talk about something interesting that Goldman Sachs has done this week. So let's go ahead and jump right into episode 1. Thanks for watching, guys. It's going to be a good one.
Got Adidas in my bag, gonna check 'em. Members on me, gonna check 'em. Gonna check 'em. Check 'em. First impressions.
Crypto.com to me is the perfect example of why people want to get into this crypto space. There is so much money to be made from being an exchange, right? So from being a company that specializes in allowing people to purchase crypto through you or from you, there's so much money to be made. Crypto.com has spent millions and millions of dollars on branding, advertisements, all sorts of crazy things, right? We already know that they spent $100 million changing the Staples Center to the Crypto.com arena. They spent money on sponsoring F1 races and all sorts of cool things. So now the next big thing that Crypto.com has decided to do is they've decided to become the official sponsor for the 2022 World Cup that's happening in Qatar, which I find kind of funny because Bitcoin is actually illegal in Qatar. But anyway, they have become the official sponsor for the World Cup in Qatar. And from my understanding, the 2021 World Cup, over 3.5 billion people watched it. It actually took place in Russia. 3.5 billion people watched that World Cup last year. So that's 3 billion people that are going to have eyes on Crypto.com. I imagine it's money well spent. But it just goes to show you how much money they're making. They're just blowing all kinds of cash on all these extravagant advertisements and sponsorships. And it doesn't seem like they're slowing down anytime soon. Well, this is kind of wild. I guess it's something you could expect from them at this point, but they have become an official sponsor. And, you know, I'm not that mad about it because at the end of the day, they're doing a really great job of spreading crypto awareness around the world. And the World Cup has such an international audience. You know, 3 billion people around the world are going to get exposed to Crypto.com. Who knows what kind of effects that has as far as crypto adoption on a macro level. So I'm really excited to see how this pans out. The other big story that I want to cover today is Goldman Sachs. So Goldman Sachs has done something interesting. Now, they didn't buy Bitcoin, but what they have done is they have purchased a contract that basically bets on whether the price of Bitcoin will go up or down over a certain amount of time. Another interesting part about this is that Goldman Sachs purchased this contract from Galaxy Digital, which some of you may know is run and owned by Mike Novogratz, who's kind of a celebrity, if you will, in the crypto space. Really famous crypto guy, Mike Novogratz, owns Galaxy Digital, and they have purchased this contract from them. So the cool part about this is that this actually makes Goldman Sachs really the first bank to do something like this, to purchase an options contract for crypto as a banking entity, if you will. So this is a really cool thing. This is just showing that they take crypto seriously by basically taking this risk and exposing themselves to crypto. They actually had a crypto trading desk they opened back in 2018 and they shut down. My understanding is that they also had brought that back or in the process of bringing that back. And so we all know Goldman Sachs is just a huge heavy hitter when it comes to Wall Street and banking in general. You know, one of the largest investment banks in the world, if not the largest. And the fact that they're participating at this level, it just adds more legitimacy to crypto. It just goes to show that these guys are taking it seriously. They're not playing games, and they're really ready and here to participate in the Web3 world that we're starting to live in. Okay, so let's talk about the state of the market. So currently, Bitcoin is sitting at roughly $42,000. Ethereum sitting just below 3,000 at 2970, 2968. Ethereum actually briefly peaked above 3,000 before getting rejected back down slightly below it. But what I want to talk about is something interesting. I want to talk about somewhat of a bigger picture, if you will. So yes, my chart looks crazy. I have a lot of lines. They all mean something, trust me. But I'm not going to confuse you with all my lines. I'm going to give you a very, very simple picture to understand. And I have an idea of where we might actually be going in concerns to the price of Bitcoin and subsequently the market as a whole, because the market typically tends to follow Bitcoin's lead. So, brief history lesson here. Not even really history, brief past 12 months lesson, if you will. The past 12 months, we've had something interesting occur here. We had Bitcoin go up and do its thing, right? Break up to 65,000 roughly, depending on which exchange you look at. Come down, touch on about half that, 30,000, and come up and break even higher, roughly 69,000, depending on, again, which exchange you are looking at. I am actually looking at Binance here. So we had here what we call the double cycle. This is something that has occurred before in the past, not as common as the typical single cycle that we usually see. But what I want to point out is this. Yes, we had a double cycle. That is something that's not as common, but it has happened before. Something that is common and that typically does follow the ending of a cycle is the bear market. Now, don't let anyone tell you any different. Yes, we are in a bear market right now. I don't care what anybody says. We are in a bear market. This is a bear market right now for crypto. Doesn't mean you can't make money and that things aren't going up. It just means that overall, the market is relatively sideways or in a downward trend, which you can clearly see we are in a downward trend. So let me remove this line here real quickly. A little more clarity. So we are in a downward trend. We're in a bear market. Now, let me give you a little bit of a lesson on how markets tend to behave, Bitcoin markets tend to behave throughout these cycles. Typically what you have is this. You have a long period where Bitcoin is relatively flat, right? Which is this period here, relatively flat. And then you have this period where Bitcoin starts to go parabolic. It pulls back, corrects, goes parabolic again, and hits the top, right? And that's what we had here again. Bitcoin came down, went sideways for a while, started to go parabolic, came down, corrected, went parabolic again, and now it's in this downward trend. Double top cycle. Now, what we almost always have is once a Bitcoin cycle tops out, that cycle does not truly end before the next cycle begins until Bitcoin's price has depreciated roughly 80% or so. Now, 80%, that is a large amount of depreciation. That is a large dip in the price. But this is the normal cycle. Whenever Bitcoin breaks new highs and begins its downward trend, we don't typically see the next cycle, the next high, if you will, until we get down to that 80% loss level. We go sideways for a while, and then we break back up and start our next move into an even higher high than we had previously. This is the cycle that typically tends to play out in Bitcoin over time. You break into new highs, you lose a large amount of the value. We go sideways for a while, people consolidate, build a nice little portfolio on cheap Bitcoin, and then Bitcoin starts to go crazy, and all those people make a lot of money to hype everybody up. Everyone gets FOMO, and we go and break a new all-time high. So why am I saying this? I am saying this because we are not at 80% loss yet. As you can see here, this is a price range tool. This is the 80% mark of loss for Bitcoin. If you look at the top of where we are to down here, you are looking at 80% down, puts us roughly 13,500. Now, I'm not saying we would hit exactly that number, then go back up. I'm just saying that that is the 80% mark. That is the spot in which typically we would lose to that point and then start to go sideways while people accumulate and get rich on the next run up. So what I'm saying is this: Bitcoin should keep going down. It should continue to go down. Right now, we are in a range. We're pretty much bouncing between 46,000 and 38,000 or so. We've been bouncing around in that range for almost 2 months at this point. We're almost heading right back up to the top of the range again. We've been bouncing around here. We keep getting rejected. What does rejection mean? That means that there's not enough buying pressure at a price level. That means that when Bitcoin is getting to 46,000, not enough people are buying it to keep going up. They start selling it, it starts going down, and then you get back down into the 36, 38 range. So what does that mean? That means that the demand for Bitcoin above $46,000 just isn't high. So that means that Bitcoin has to keep coming down in price until it finds that price range that people are willing to actually spend money on and buy it. That typically tends to be at the 80% mark. That tends to be down here when most of its value is lost and people are, unfortunately, lost all hope and in very, very terrible despair, while the rest of us are going, oh, this is great. We're back down. Now we can get our cheap Bitcoin and get rich all over again. But for the most people, they are in very deep, dark despair and have lost all hope. Unfortunately, that's just the way that this goes. So we haven't hit that point yet. We haven't hit the point of mass despair, mass hysteria. And I'm going to hold to that theory on us going down to this level unless something happens, which is the price reverses, we go up, we break out of this 46K range, and we go up and even beyond that, I would say, and maybe break up until like a $54,000 level, right? Above this red line. If Bitcoin can get above this line, I will say we're in a bull market again and that we're going to go higher. Until that happens, I am sticking with the tried and true, which is at the end of a cycle, Bitcoin will roughly lose 80% of its value over time. I look back in 2017 when we had our cycle of hitting roughly $20,000 and hitting back down our 80% loss. It took roughly 12 months for us to get back down to 80%. If that was to hold true again, that means that we are looking at roughly November before we hit the 80% loss. But that could change, right? There's a lot going on with inflation, the war in Ukraine, all of these different factors and variables, Fed rate hikes, right? Tightening of monetary policies, hawkish stances on things like this. So that could change things. The economic environment could cause Bitcoin to do something that is slightly different. Not to mention, we also have a lot of institutional money in Bitcoin that we didn't have before. And so we'll see. It could behave differently. The cycle that has typically played out could no longer play out or could change. But until I see evidence, which again is Bitcoin above $54,000 for me personally, that's my number I'd like to see. Until I see that, my assumption is that we may continue to go in this range for a while. Eventually, though, we'll touch down on this line one too many times and we will fall down below it and we'll start to slowly make our way down to the 80% mark. Okay, so that's my little 2 cents on my analysis as far as what I see currently happening and what I expect to happen. Again, I am not stuck to any theory. I keep an open mind when it comes to the price. I leave emotions out of it. And so things could most certainly change and I will accept that change if the time comes. But I have not seen that evidence yet. And so I am sticking with my theory for now. All right, guys. Thank you so much for tuning in to another episode of Web3 Wednesdays. I'm out of here. Please like, share, comment, subscribe, all of that. if you enjoyed this video, if you want to hear more commentary, I would really appreciate your support. The more you support me, the more motivation I have to do more videos and bring you guys great content. Thank you so much for watching. I'll catch you in the next one next week. Have a good one. I'm out. Peace. Thank you so much for watching today's video. I greatly appreciate your support. Quickly, here, before you click out of this, I just want to say one thing. Please make sure, if you haven't already, click below in the description. There is a link to my website that will allow you to get a free copy of my ebook, A Beginner's Guide, 5 Mistakes to Avoid When Entering the Crypto Market. Guys, this ebook is absolutely amazing. It's completely free. And what it's going to do is going to take the knowledge that I gathered when I first entered and made mistakes, and it's going to transfer it to you in an easy to read and easy to understand format. It's going to allow you to enter the market and avoid the mistakes that I made when I entered the market, right? I want everyone who's on this channel, everyone who's watching, I want you all to have the opportunity to be successful from the start. And so this book is my way of saying thank you for supporting me, is my way of transferring knowledge to you and allowing you to come into this game with a full understanding of the mistakes that you want to avoid. So please make sure you click down below in the description, get your free copy. Thank you. I'll see you in the next one. Bye.